Hi, welcome back, and today we are going to talk about silver. Why we knew silver was going to get hammered and dumped again, just like in 2021. Here we warn in advance, 10 days in advance, that we made this red alert about silver. We will talk about Bitcoin, inflation, interest rates. That will be all that we'll be talking today. So the red alert, they are talking about a silver short squeeze now. The precious metal community was warning that we could face a silver short squeeze. That was 2 weeks ago, between 2 weeks ago and 10 days ago. And the last week, they were warning that we could get a silver short squeeze because the premium highs were the premium highs were exploding, and we also have a special situation in the collateral pricing of the silver ETF like SLB. Very weird signal from the physical, like increasing disconnection. So that was a contrarian signal that we were about to get a hit like we received this week. So we warned in advance so people could take action and protection from the paper price. We are talking now only about the paper price. In the past, we made the same signal with a live concert on February 28, 2021. This is the video. You go search the Algomoneyfest live concert. Everybody was worrying about the silver short squeeze, just like this is the shams. It was streamed live. This live concert is available there if you want to watch it. The price of silver was 28 at that time. Just Google Algomoneyfest live concert. You will see that this same psychology gets repeated with the same patterns. So let's go now to the silver patterns. The gold pattern that we saw and we warned in advance was what I call the 2013 pattern. You see here, let me zoom out. In the price of gold, you will see more clearly that it is all run by Fibonacci's. You will see in the silver chart that, and in gold chart, you will see that we have this all the way back to 2013, a massive formation. Let me unzoom here. We have a massive formation. You will see like a double top formation here, crossed by the moving average that was canceling and ending the structure. And you will see this structure like we have a zigzag movement with two tops crossed by Fibonacci levels. That's what happened now with gold. And if we go back all the way to 2013, you will see 2011 to 2013, you will see at that time in 2013 we have the same cross. This was in the weekly candle. If you go all the way from silver here, you will see mostly in the weekly chart gold, this structure you see here with multiple tops and a crossing of the level here. That was the structure I was warning. And if you go back to now it's the same pattern. I'm going to zoom out and you will see that the same structure. 2013 with a cross, and between 2020 and 2022, 2 years pattern and 2 years pattern, the same structure. That was the reason why I was warning. Let me move myself now. Sorry, I will move myself here. You will see I will zoom if you don't see here, the same structure crossed by the 38 level Fibonacci level. That's the paper price. And I'll go back again to 2013, and you will see that we made the same structure but in a longer term. So it means that we could go even lower from the repeat. If we repeat the same pattern, we could go even lower prices. I know that we have a massive recovery for silver today. That's one of the signals, very important signal. If you see here, I want you to look to the structure. You will see, I hope you will see now. Here you have the structure of 2 years, 2 years completely, and again the structure. That was the pattern for me. And in the price, the gold was giving the signal that was about to happen, and the same story happened with silver, but faster. Faster has an even more additional signal. The 200 moving average was warning the same story. Was warning that I don't know why now it's not getting loaded. Sorry. Was warning the same story. Maybe I have something wrong here. Let me go back to 2013. You will see the same structure in silver price. The same structure, always the same. So if we repeat the same pattern and we end the same pattern, it means that we could go even lower for silver, but I'm not sure about that. But there is high risk that we go to this area, but this bullish candle of today is very interesting because it has the potential to cancel the final correction, and the correction ended today. That's one of the main scenarios. We got the target here, and we enter a very, very aggressive wave going all the way back to the top very fast after the Fed rate hike. Or we are just going to test these highs most likely, and then we continue to go down all the way back to this area here, which is 16, between 16 and 17. And so in the future we have two possible scenarios. We go very fast to the tops now in the last quarter, very fast movement, very bullish, or we get a temporary test of the 20 level, and then we crash pretty fast to the 16 scenario level. That's the two most likely scenario for me. So I'm watching this because this recovery of today back to 1955 should be hold for another week with the Fed rate hike of the next week, which is on September 21. So going back to the structure of the forward curves, you will see that at the beginning of March, the top of this curve of the futures Fed fund rates, at the curve of the forward curves, that means the future of the Federal Reserve rate was around 4%. So now the market is moving higher to the level of 4.50%. So the market is pricing higher levels. So we have a hike now out to the level on the area of 3, and then we have another huge Federal rate hike, and now again one more Federal rate hike, all the way until March, April of the next year. So let's jump to the Ray Dalio story. He believes that a 4% high will sink stocks by 20%. I agree with that bearish signal, especially in all the retail sectors that is going to be crushed by the increasing borrowing rates, with a population that the United States has only $500 average on their bank accounts of liquidity. That's one of the stories getting there. I don't have the real number, but I remember I watched an article that the people is way too leveraged in the developed world, and they are not ready for these kind of shocks. So we are seeing these shocks, and if you see the historical interest rate from more than 50 years of the federal funds rate, it means that we are just entering the bullish area, the bullish party here, because we are just about to start. And it means that we should go all the way back to 5%, which is this level here, that's like the central part of the Federal Reserve rate. Guess what happened when we have this level of inflation of 6-8% in history? You don't stop at 4.5%. That's a bet, that's a strategy, that's a signal that the Federal Reserve is giving a low dose drama. So what is this curve saying? That according to, if you follow inflation and interest rates, it means that we could go even higher, 5-6% of interest rate levels. So the market is still not pricing that, and that could be massive drama in the market that is not being priced. So we may have a shock after a new shock between now and next year. So there is not price all the damage in the cars now. It's not price. The government, the Federal Reserve, is containing the expectation of more drama, and the historical charts are saying that there is huge risk that we could go above 4.5%. So that's why we have been able to predict almost all the movements in the precious metal market. Amazon, the crash of Amazon by the wholesaler of inflation seas. You check all the stories. We also warned that the stocks, there are some retail stocks that are way too overvalued, and you will see that. Argentina hikes interest rate. I predicted in March that we were going to 74% by at the end of this year. In my inner circle, to my co-workers, when it was 50. So now the central bank, the interest rate of the central bank is 75% here. That's what is happening here? We are testing a very important resistance prior to a moment in hyperinflation. So the charts help also for interest rates here in Argentina. And this is a report from the Central Bank of Argentina, when we are going to have 95% inflation and at the end of the year, and then we should go slowly to a lower level of inflation. This is very optimistic expectation, but this is what the market believes that will happen to Argentina inflation rates. The market is pricing a recession here in the middle, a low recession here that could explain this topish scenario for inflation in Argentina. This is the story here. We have 100% inflation and 75% inflation rate. Turkey is around the same level. You will see that the pain is coming for everybody. The pain is coming. So more pain ahead and the recession risk. The FedEx CEO is warning about a global recession. That's very likely because we have these shock interest rates coming, and I'm saying now that we may see a shock after a new shock of interest rates that will help crash the valuations. The valuation that there are a lot of stocks that are overvalued right now, especially in the B2B business. So you see here that the risk continue to go higher, and the risks are there. We have more information coming from the market that silver is being disconnected from the real price. That could be the case of the today's recovery, and it's very bullish. It's maybe canceling the downside risk, and we start a very crazy scenario to the top, or which is just a bullish trap, and you will get hammered next week. So thank you very much, and that's it. Bye bye. Hey!